Hey everyone, welcome back to Corporate Decoder, the place where we dissect the most complex financial documents to reveal the juicy secrets hidden within. Today we're diving deep into a recent filing from PULTEGROUP Incorporated, a major player in the home building world. Get ready because we're about to uncover exactly how they've been managing their massive operations with billions of dollars in play. Before we dive in, if you are getting value from these decoded insights, make sure you are subscribed and have the notification bell on. Also join our Discord community linked in the description below to discuss these findings with other corporate explorers. Alright, so what is the big story here? PULTEGROUP has just completed a massive public offering of senior unsecured notes. Think of it as them borrowing a huge amount of money from lots of different investors to fund their operations. They've issued two types of notes, one that matures in 2031 and another in 2036. This is a pretty common way for large companies to get the capital they need for big projects like building more homes. Now let's talk numbers. PULTEGROUP raised a cool $800 million in this offering. That is a serious chunk of change. This money is split evenly between the two types of notes, $400 million for the 2031 notes and another $400 million for the 2036 notes. These aren't just random borrowing terms, they come with specific interest rates. The 2031 notes will cost them 4.250% interest, and the 2036 notes come with a slightly higher rate of 4.900%. So they are paying a premium for that longer term borrowing. To make sure investors feel safe, PULTEGROUP has secured these notes with guarantees from its own subsidiaries. Basically, if PULTEGROUP itself somehow couldn't pay back the debt, these subsidiaries are on the hook. This is a strong signal that the company is confident in its ability to meet its obligations. It also means that a significant part of their business is backing this new debt. So when does the interest get paid? It is twice a year on March 1st and September 1st, starting in September of 2026. For the 2031 notes, the principal is due the 1st of March 2031, and for the 2036 notes, it is the 1st of March 2036. These are pretty distant dates, meaning PULTEGROUP has a good amount of time to use this capital. Now here is an interesting bit. PULTEGROUP has the option to pay back these notes early. They can technically call the notes back before their maturity date. If they do this before a specific date called the par call date, they'll have to pay a little extra, a sort of penalty called a make-whole amount. This is basically compensation for the investor not getting their expected interest payments over the full term. Cleverly structured to give the company flexibility without being excessively penalized too early. There is also a provision for a change of control triggering event. If something significant happens that fundamentally changes who controls the company, they might have to buy back these notes. And if they do, they'll pay back 101% of the principal amount plus any owed interest. This is a protection for the investors, ensuring they don't get stuck with debt from a company that has undergone a major ownership shake they didn't sign up for. The agreement for these notes also comes with some rules known as covenants. These are designed to keep PULTEGROUP's financial health in check and protect the note holders. For instance, they have limits on taking on more debt, especially secured debt, without giving the note holders equal or better security. They also can't just sell off major assets or merge with other companies without some serious consideration for these notes. These are standard protections for lenders. This whole deal is governed by a formal contract called an indenture and a supplemental indenture. These are the legal blueprints for the debt. It is important to note that the original indenture from the 5th of February 2026 was part of a larger filing, a registration statement on Form S-3. This shows that this financing was planned well in advance and disclosed through the proper channels. US Bank Trust Company National Association is acting as the trustee, which means they represent the interests of the note holders. And as with any major financial transaction, the company is backed by legal opinions. Here we see opinions from the law firm Sidley Austin LLP and also from Todd N. Sheldon, their own executive vice president, general counsel, and corporate secretary. These opinions confirm the legality of the debt issuance and the guarantees. This is essentially a stamp of approval from legal experts saying everything is in order. Now, looking at this from a Warren Buffett perspective, this move by PULTEGROUP to raise $800 million in debt is a clear signal of their growth ambitions. They are not sitting on their hands, they are proactively seeking capital to expand their business, perhaps by acquiring land, building more homes, or investing in new technologies. The fact that they are issuing unsecured notes and getting guarantees from their subsidiaries suggests a level of financial strength and confidence in their future earnings potential. The interest rates, while not insignificant, are reasonable for the current market, and the maturity dates give them ample time to generate profits to repay the debt. However, there are always risks. Taking on this much debt increases their financial leverage. If the housing market were to experience a downturn, PULTEGROUP could face challenges in meeting its debt obligations, and the covenants in the indenture could restrict its flexibility in responding to market changes. The make. Double hole clause and the change of control provisions are there to protect investors, but they do add complexity and potential costs for PULTEGROUP if certain events were to occur. In conclusion, PULTEGROUP is making a bold move to fuel its growth. This debt issuance indicates a strong belief in their business strategy and the market's demand for their homes. While the increased debt load warrants careful monitoring the company's proactive approach, and the protective clauses in the agreement suggest a well-managed and strategic financial operation, they are essentially betting on continued success in the housing market and seem ready to capitalize on opportunities. Alright, that is our deep dive into PULTEGROUP's latest financial maneuver. What is your take on this debt issuance and what does it mean for the company's future? Let us know in the comments below. If you found this analysis valuable, hit that like button and subscribe for more of these corporate breakdowns. And don't forget to join our Discord community linked in the description to keep the conversation going. Thanks for watching and we'll see you in the next decode.